Hello everyone, welcome to Financial Success. Today I have 3 growth stocks that I'm going to talk about that might be a good add to your portfolio, especially with the market being so volatile last week. I think there is a lot of potential for short-term and long-term growth. If you enjoy the content, please hit the like button as it really helps out the channel. I appreciate it. Also, I want to mention there is a link below for Patreon, which will give you access to a Discord chat where I will be mentioning news that comes out and stock updates, including my buys and sells. If you also want to buy cryptocurrencies, the platform that I use is Binance, and so they have a lot of smaller altcoins on there and that have not been listed on Coinbase yet. And then I also want to mention that their fees are substantially less than Coinbase. And so Coinbase's fees are 1.5% and Binance's fees are 0.1%. So it is 15% less. And so if you are an active trader of cryptocurrencies, I highly recommend it. And so let's get into it. The first stock that I'm going to be talking about today is Draftkings. The ticker symbol is DKNG. And as you can see here, I have the 1-year chart up. So back in March of last year, it was trading right around $12 to $13, and it is now up to $60. And so this stock has grown substantially over the last year. However, I do see a lot of potential for this stock going forward. And so let's look at this article here. They are also mentioning that it has been in a steady uptrend and that they have reported strong fourth quarter results for 2020. And so for 2020, they have reported a revenue of $614 million, and then for 2021, they have a projected revenue of $950 million. And so this implies a year-over-year growth of 54.7%, and so they have a high growth trajectory, and it is not surprising that the stock is surging. DraftKings online sports betting is currently live in only 12 states, and so it is likely that more states will legalize online gaming and sports betting. With the new market, the company's revenue outlook will be revised on the upside. And so I think what they're saying is with their current, where they're at with the 12 different states, they are hoping for $950 million in revenue for 2021. However, if other states legalize the betting for sports, that the revenue can increase from there. And so I think there's a lot of potential for that, especially because 12 states have already passed the law for gambling on sports. And so I think this will pass on to many other states as well. And so I'd also like to take a look at their website here. They do show a picture here that they also have a casino within their app. And so this is another way they can gain revenue from sports. They can have people play these different games, whether they're slots, roulette, or table games. And so people will be betting money there. And so I think that is another way for them to make money, especially because it's like almost buying stock in a casino. And I've never seen a casino go out of business, and so I think there's a lot of potential with DraftKings on their sports betting and this casino that's tied into their app as well. And so the next stock that I'd like to talk about is ChargePoint. The ticker symbol before that is CHPT. This used to be SBE. They just closed a SPAC merger with Switchback Energy Acquisition, and so now it has converted to the new ticker symbol. And so as you can see here, this stock was trading right around $10 since it was a SPAC. That is what they started out at. And then over the past few months, it has traded at almost $50. And so over the last couple of weeks, with the market going down, this stock has fallen significantly. It was trading under $20 on Friday and is currently sitting right around $26. And so I think this is still a good buy for this stock. I think this stock has a lot of potential. I do have it in my long-term portfolio. And so I'd like to take a look at what they do. And so they create the chargers for different vehicles. They don't focus on just one brand, which is the good thing. I know EVs out there, everyone's trying to find the next Tesla, what one it's going to be, whether that's Lucid or Workhorse or some other company, right? And so with the chargers here, these work for all the different vehicles, and so it's not like you got to find that next EV stock. You can just focus on the chargers that are going to be charging all the vehicles that are being created. And so this is a very lucrative business, and so I think there's a lot of potential. And so I'd like to take a look at their overview here. They are mentioning that ChargePoint has 4,000 commercial and fleet customers and has delivered more than 87 million charging sessions to date. However, this is just the beginning, with the total cumulative investment in EV charging infrastructure in the United States and Europe expected to be $60 billion by 2030 and $192 billion by 2040. And so they're expecting significant growth over the next few years. I'd also like to take a look at their latest news down here. They did mention here that they are the world's first publicly traded global EV charging network on the New York Stock Exchange, and they are also going to be announcing fourth quarter and full fiscal year 2021 results on March 11th. And so that's something to look out for on Thursday this week, is when they release those. I think they are going to be positive since the EV market is going to be needing a lot more of these chargers going forward. So the next stock that I'd like to talk about is also EV related. It is General Motors, and so the ticker symbol on this is GM. And so as you can see, I got the 1 year chart here as well, and so they have grown substantially over the last few months too. And so they dipped back when COVID first hit in March down to $20, and now they are trading at almost $60. And so over the last couple of weeks, they did drop a little bit, not as much as some of the other smaller penny stocks, and so that's why I like this stock. I think GM has a lot of potential going forward. They are really starting to go heavy on the EV sector. They are stating that they will be exclusively offering electric vehicles by 2035, and so all the vehicles that they sell will be electric. And so I'd like to take a look at this article here. This article from Seeking Alpha is stating that is General Motors stock worth the wait? And so for a large automotive manufacturer, it does not make financial sense to enter a niche market with not enough demand to realize its manufacturing, marketing, and distribution. And so GM has now decided that it is worth going into the market of EV. They see a lot of potential for that, whereas maybe 10 years ago when Tesla first started, it was not a huge market for it, and so that was not something to focus on. And so there's a lot of smaller automotive companies as well trying to make electric vehicles, whether that's NIO, Workhorse, or Lucid, and so there's a lot of attention on them. However, I think that they're going to have a hard time scaling to the scale of like General Motors. And so that is what they state here as well. And so they are saying that General Motors has a competitive advantage to produce quality EVs in large scale without the growing pains and stumbles along the way, like competitor experiences such as Tesla. And so Tesla did have a very hard time getting to mass production and then keeping the same quality and tolerances that they were holding on just a prototype. And so that's very similar to some of these other companies as well. They can create a pretty picture, they can create a prototype, but can they scale this up and create 100,000 vehicles while holding that same quality? And so that's the difficult part. And so I definitely think that Tesla, Lucid Motors, Workhorse, a lot of them are very innovative companies. However, I think that the big picture is being overlooked. And so that, because these cars have to be mass produced, you can't just create like 10 of them and then call it good, right? And so I think we're all getting hyped up over one picture and one vehicle, rather than looking at the big picture and saying these have to be mass produced. And so whether that's these smaller companies get bought out by the bigger automotive companies or not, I'm not sure that's something we will see in the next 10 years or so. And so I see a lot of potential for these stocks, especially in the long-term growth. In short term, I'm sure there's potential there as well because the stock market was going down last week, and so a lot of these stocks did drop, especially for ChargePoint, and so I think that is a good buying opportunity. And so if you like these stocks, please do your own research since I am not a financial advisor. Thanks for watching, and like I said, if you enjoyed this video, please hit the like button since it really helps out. I appreciate it. I will see you in the next video. Thanks. Bye.